there, and welcome to this ADIPEC webinar in partnership with the Boston Consulting Group. I'm absolutely delighted to welcome you all here to this live, interactive, hour-long discussion, really looking at building future business resilience. This is what it's all about. It's a title we hear in this industry time and time again, but we're going to really examine it in depth. Of course, this dialogue is very much part of the ADIPEC conversations that we're putting in place in the run-up to ADIPEC 2020 in November. So we're delighted that you're here. I'm Etna Trainer, and I'm going to be your host for this session. Before we get started, I just want you to become familiar with the screen. As you can see, it's a rather dynamic screen. You have a few boxes there. You can move them around for your convenience and comfort. So just make sure that you're happy with that. We want you to get familiar with the chat box. Be sure to send in your questions. We have 3 great presentations, and you can send some questions for each one. And if, of course, you want to address to any particular speaker, make sure you do that. So we will take a break in between each one and make sure that we get those questions. As well as that, of course, we're going to get you involved, and we're going to add some poll questions as well, just to get a bit of a flavor as to see what's going on in your mind. You're at your business, you're at your desk or at home at your desk, wherever you are, and we want you to be involved, and we want you to let us know. One other great thing about this webinar, of course, is we're live for the next hour. So if your colleagues have not joined us, perhaps you can just invite them in. They can at any time join in and make sure they get it. And even more importantly, we will turn this round rapidly for you. So it will be available on demand very, very quickly as soon as we conclude here. So that's just some of the housekeeping, of course, that we have put in place for you. Our presentations, familiar here. Also have a look there. We have resources and research that the Boston Consulting Group has very kindly put at your disposal. So you can download that as well. And again, have a good read at some of that very, very valuable research that will, of course, help to keep you very informed in terms of what's going on here. The team at ADIPEC, of course, combining and coordinating all of that valuable research to make sure all of our people out there really have the best information, the most up-to-date information, and more importantly, to be here with us live on this very important ADIPEC webinar. So let me introduce our panel to you. We're absolutely delighted to have with us from the Boston Consulting Group, Managing Director and Partner, Alex Dolja is with us. And of course, Alex is also a leading player and a leading expert in procurement and supply chain. So something I'm really excited about. Having worked around the world, I'm so eager to listen to your contribution, Alex, and hear what you're going to have to say here. Also joining us, the Managing Director and the Senior Partner for the Boston Consulting Group, Sylvain Santamarta. And of course, Sylvain began his career with an international oil company, knows this industry inside out, again, has traveled in many continents, really advising people on what is going on in the oil and gas sector. And he is, of course, the head of the Center for Digital for Oil and Gas for BCG as well. And Christophe Sassolos, also from Total, joining us too. His career spent at Total, and he is now with us here in Abu Dhabi, in the region, the president of Total E&P in the UAE, and of course the country chair here as well. So we're absolutely thrilled with our 3 panelists here who can really add some tremendous value to what's going on today. So we're going to turn to you, Alex, first, and hear from you as you look at in-depth new reality for oil and gas, building resilience through procurement and supply chains. I'm going to hand it over to you, Alex. Thank you.
Thank you, Edna. So in the heart of supply chain is actually the very constructive tension between operators and vendors. And on one hand, we see operators who are interested to improve their cost competitiveness and create savings. But at the same time, we see vendors and our supply chain who would like to stay healthy and preserve their profit margins. I think in this current situation, I would like to leave you with 5 very, very important messages. Number 1, current crisis that we see in the markets, consisting of oil prices as well as COVID, is very different from what we have seen in 2014. So our vendors entered this crisis with significantly weaker health. They have more debt, they have less margins, and they have less cash levels. So in some sense, when operators are pushing price reductions on vendors, vendors don't feel very healthy, and it is perfect recipe for disaster, perfect recipe for supply distress in supply chain. At the same time, if you look at oil and gas operators, then their reactions to current crisis are very similar to what they have done in 2014. They're just going to suppliers and usually asking for 20 to 30% haircuts in terms of prices. And once again, this pushes supply chain even further into distress. At BCG, we have done a little bit of modeling. We looked at financial health and financial data of most of the suppliers in the world. And in some sense, if we just assume that the oil price will continue to stay low, operators will continue to push price reductions on suppliers, and COVID will continue to disrupt some of the manufacturing processes. More than half of the suppliers, because of this, can actually go bankrupt by the end of the year. And this is actually quite a staggering number. And this is the reason why we actually wanted to highlight the topic of resiliency, which in the short term, actually we encourage oil and gas operators to create some forward-looking transparency into where the risks are, which suppliers can actually need help, and with which suppliers they can continue to have price discussions. And of course, in the medium to longer term, new technologies and strategic partnerships, much more collaborative discussions with suppliers should be much more prevalent and much more value creative going forward. I would like to share with you just a few data points to show how real is this situation for the market. What you see is the result of very recent BCG survey from May of 2020, when we surveyed more than 100 of oil field services and equipment companies. And you can see that 100% of respondents actually say that operators are right now asking from them, number one, activity cuts. It means the demand just going down. And number two, more than 80% of them say that price reductions are also asked from them. So once again, this is perfect recipe for disaster because it is double and triple shock for the suppliers. Demand goes down, price go down, and health is significantly weaker than it has been for the number of years going in the past, right? And at the same time, you see that most of the collaborative levers at the bottom of this slide, those which are like joint cost improvement, de-specification of requirements, very few operators are actually looking at this. So once again, we would encourage both operators and suppliers to try to understand what are the areas where you can really go aggressively for demand and price haircuts, and what are the areas where you need to be much more collaborative. Let me give you one more data point. Actually, not all suppliers are affected by this pressure equally. Of course, it depends on the category of goods and services that suppliers are producing. What we have done here at BCG, we actually looked at financial data of all the suppliers which have some public data available about them. And we looked at what is the margin, what is the level of debt, what are the interest expense, how much cash they have, and what is the approximate balance between fixed and variable cost. And based on this, we try to understand what is the ability of the supplier to withstand this huge pressure from the industry and from oil and gas operators. And actually, when you look at this chart, the way to read it is the more red you see on this chart, the less is time, or the shorter is time when suppliers start to go actually into bankruptcy and in distress. And the more green you see here, the more is the maybe cash cushion, which allows them to stay afloat a little bit longer. And actually on the left-hand side, you see some of the categories which are quite vulnerable. You see seismic, you see some of the well services, you see a little bit of a mixed picture on subsea, and of course you see challenges in rigs and drilling, right? So once again, for operators, we would actually encourage you to apply a very differentiated approach. And before you push for some of the discounts and for some of the demand cuts, just try to understand your vendor health. And maybe this heat map can help you. And on operators, of course, on suppliers, of course, it's very important to try to understand how to build up this communication with operators and make the risks of the supply chain transparent to operators. In the end, I'd like to maybe leave you with two forward-looking steps. And maybe in the short term, what we would encourage industry to do, and by industry, actually, we meaning operators and the whole supply chain vendors. So in the short term, we would encourage actually to build forward-looking visibility into supply chain risks and supply chain distress, which can accumulate in the supply chain. Something which allows you to be much more proactive than reactive and see potential problems which are coming at least 12 weeks down the road rather than current force majeures. And of course, in the longer term, technology and much more collaborative discussions, some alliances, strategic partnerships can provide much better answer to the industry and to this constructive tension between operators and supply chain.
Super, thank you so much, Alex. And indeed, I mean, when we look at that and we look at the idea of resilience, I think the danger with this cycle too is it's probably going to be here a little bit longer. And if you've been looking, of course, at the headlines for the last few days, I mean, clearly talking about the R word, recession in the world. And people saying, you know, it has been coming on after a really good period of growth that we've had in every industry. So I think at the moment, you know, everybody is a bit nervous, but there's time, of course, for a lot more understanding that people need. Let's just move on to our poll question, because I'd like to get our audience at home quickly involved. And as you mentioned there, again, asking that question to people, that survey that you've done in terms of resilience and how are people looking and the danger, you know, that industry is actually going to go bankrupt. I mean, nobody wants to see that. If people can be resilient, if they can hang on, they actually hopefully can come out the other side. So it is, I think, words like understanding and empathy, we need them in this business like every other business more than ever before. So let's have a look in terms of you at home, and if you can look at this, how well equipped is your procurement and supply chain organization? Really looking at this, have a think. I mean, are you equipped at all? Maybe not really. Maybe you're just reacting on the supplier distress when it happens, unfortunately. You know, somewhat equipped, could be better. Obviously looking at that historical data as well. Are you well equipped? I mean, have you really been looking at those risks, all of that, really be looking, and again, you know, really well equipped to the point that you totally understand what's going on? I'm going to leave those questions with you just a little bit. And Alex, if I can quickly come back to you, again, you talk about the supply chain that's in distress, but, you know, operators under enormous pressure to reduce costs. But really, is just reducing cost, is that what's going to improve cost competitiveness? I mean, what's the answer here? Or is there no easy one right now? Alex.
And I think this is actually, you're looking at the heart of the problem. Operators are under significant pressure to reduce costs because of very low oil price. And we don't want suppliers to collapse. I think the answer is actually in finding new ways of working and increasing collaboration between suppliers and operators, increasing on a significant level, same way as it is done in automotive, in aerospace, in defense, where suppliers and operators are collaborating with each other. I think this is something what oil and gas should learn from other industries.
Yes, and I think we hear that time and time again. We hear it at conferences. I know at the last ADIPEC conference, this was, and they had brought some great speakers in from other industries to actually share best practice and really show us. Let's have a look at the results of this poll, and I'd like you to also perhaps comment on this, Alex, as well. So here we are. We have got 54% somewhat equipped, you know, so that's, oh, there we are. It's the somewhat equipped, which is the kind of neither here nor there. What would you suggest to people in terms of perhaps moving that better? Because I would imagine you would say they need to be well equipped. Alex, stay with us.
So you're absolutely right. I think this somewhat equipped gives people some degree of comfort, but it actually can be fake level of comfort. Somewhat equipped means that you see that some risks exist, but you might not have enough time to react on them properly, and you might not have time to maybe take advantage of some of the risks which represent opportunities. So actually creating much better communication channels between operators and suppliers, building maybe forward-looking models to try to understand how long suppliers can last in current environment, and then trying to work together. Actually, when we try to work together, we can unlock significant potential from alliances and strategic partnerships.
Yes, and that's probably more important than ever before. We're going to talk more about that, particularly with Christoph. I have a question here from Suresh Kumar. Suresh, thank you so much. A lot of questions coming in. Please keep them coming in. We will have lots of time after the presentations to make sure we really engage. So for you, Alex, quickly before we let you go, second and third level supply chain to your business have a lead time or a lag time between the oil price versus investment versus the contract award. So do you believe that the oil price has transitioned to all levels of supply chain, unlike COVID-19? What do you say, Alex?
So I think the answer is much more yes than no. And actually, we're working with a number of companies right now actually to look at tier N supply chain risks. When we look at suppliers of suppliers and suppliers, we actually see that obviously you are right, COVID disruptions to logistics and manufacturing are already happening almost everywhere. And we are actually, in some of the countries, we are starting to move into the second wave. But also demand cuts and price cuts, which are actually pushed from operators to tier 1 vendors. We see them already reaching tier 2 and tier 3 vendors. So I think all of these things together is a recipe for disaster, unfortunately.
Yes, well, stay with us. Thank you so much for your contribution there. We're going to make sure we bring you into our wider conversation. So Alex Dahlia there, thank you so much. I'd like to hear now from Sylvain Santamarta. Sylvain, of course, really looking at and having that great in-depth knowledge right across, having worked in the industry, and now looking particularly at the digital side, of course. This is something I'm very, very interested in, and I think we're going to see great interest from our audience in this, Sylvain. So looking at how can technology and innovation particularly support business resilience. So your presentation, over to you, Sylvain.
Thanks, Edna, and thanks for having me. Delighted to be with the full group. So what I will do, Edna, if I may, I will maybe go back first to the criticality of resilience, the why resilience is so important for the industry. Let me maybe highlight first 2 dimensions that are critical to the legacy business of an oil and gas company. And I think the first one, let's say beyond the current crisis, if we look at the structural issues the industry is facing, you see clearly an emerging imbalance between supply and demand, right? So we see a lot of supply, and there is real question around the structural direction that. There's oversupply, and we have emerging question around where the demand is going. With the emergence of electrical vehicle. I don't know if you've seen recently, but BP and Total, the CEO of BP and Total, have started to put forward the hypothesis that peak oil was already behind us. So in that context of oversupply and question around demand, resilience is of course critical, right? Because whoever has the lowest cost of supply will be able to generate cash. The next issue, which again is very close to the legacy business, is license to operate. And what I mean by license to operate is regulatory risk, associated with CO2. I think that is a real risk. And also, generally the responsible management of our operation. Attached to it, you will see a lot of cost, and decommissioning is probably the most obvious element associated with responsible management of your operations. So these are 2 structural challenges faced by legacy business. At the same time, oil and gas companies are transitioning towards new business model associated with energy transition. Now, those business models don't have the materiality and the economic attractiveness of their historical businesses. So the resilience of your business, the ability to generate cash in downside scenario and generate a lot of cash in upside scenario is absolutely essential for oil and gas company to remain an attractive value proposition to investor. And that's my last point. So now that I have maybe talked a little bit about the why and the criticality of resilience, Edna, what I'd like to do is maybe try to qualify what we mean by resilience. And I think the underlying belief that we have at BCG, having worked with many oil and gas operators, is we see significant potential within our operation. And what we are aiming at really is much better decision quality, supporting by much better data. We are aiming at work processes that are leading to optimal outcome with minimal inputs. We are aiming at much better interface and collaboration between the various disciplines in the way the business is run. By doing so, we can get our staff to be much more productive. As of today, you have many of oil and gas staff that are actually spending time on activity that are mundane and not really value add. And then finally, we managed to instill in this organization a real culture of continuous improvement. So when we talk about resilience, this is the type of operation that we should envision. And of course, when I paint this picture of what the future could hold, it also implies that what we are doing today is far from this reality. And this is, I think, what is at stake. this is what we are basically seeking to achieve, is strengthen the resilience of the business by addressing fundamental issue such as the one I just talked about in the way we run the business. Now, if I go to the how now, I think, you know, the why and the what, I think we can easily converge towards. What I think we are convinced at BCG, when you look at the power of technology to deliver this improved business performance, the issue we think is not so much in the technology, the criticality or the challenge of the technology, but much more in how you drive the change in your organization, how you actually transform your organization, your governance, the deployment of technology in a way that can actually lead you to the target picture I was trying to depict. So when it comes to the deployment of new technology, you know, harnessing the power of data and digital, we believe the how is absolutely critical. Let me try very quickly to highlight some elements of the recipe that I think are going to be essential. I think, first of all, focus on what matters most. In general, what we see across our clients, they do far too many initiatives, they drive far too many initiatives that don't target the biggest bucket of value. Second, focus on your workflow end to end. If you really want to drive step change in your performance, you really need to reinvent, optimize and reinvent the way you work end to end. You also need to think about new ways of working and new levers. So design thinking, agile, zero-based design are some of the techniques that we strongly encourage to deploy to really push the boundaries of the possible. Also be very asset specific and focus on the frontline staff, address really specific issues. This is how you're going to have a significant impact. And then finally, mobilize hearts and minds. There is a huge change agenda. You know, this history of pushing solution, looking for problems doesn't really work. Engage with the frontline. Make sure that the technical solution and the technological solution that you deploy to the asset really address the issues faced by your staff. This is a way of getting convergence between business interest and then the well-being of your staff. This is how you're going to get a sustainable transformation. Back to you, Edna.
Thank you so much. And indeed, how interesting there, the way you put it too, it's the technology is in place, but it cannot sit in isolation. And I think, again, perhaps over the years, because digital and digitalization has been with us for a while, it's not that new, but indeed it's about looking at it, I think, more holistically in terms of making sure people know what's going on, because I think it's been a bit of a stop-start over the years. Let's bring you all, to our dear audience, involved now. And just as what Sylvain was saying there too, it's like, what are the biggest challenges to technology and digital transformation? So you've got the technology, you have the kit, you have the software, you have the hardware, you have all that in place, but that cannot operate on its own here. So have a look there and have a think. Is it leadership? I mean, is it data management, the availability of the suitable technology? You know, where are we in terms of capability gaps in the organization? You know, addressing the business issues. You know, are people actually looking at the right cases on that? Can you replicate this company-wide? And even as you said there, you know, when it comes to the change management, hearts and minds, you've got to get everybody on board. Let's give you a few minutes at home there to have a look at that and come back to us and just give a feel for the pulse. What are you thinking out there? What are you seeing in your organization that actually can maybe help us here to understand it a little better? But one question I also want to put with you, again, Sylvain, what you've been talking about, because over the years, I think a lot of companies have invested money in a digital, maybe not a transformation, but in different solutions. And not always have they had like wonderful results. Sometimes, in fact, you know, disappointing results. So this kind of knocks them back a bit. You know, what can you do to convince them that actually they have to stay in this for the long term? And I mean, there's no one solution fits all, but we really are on this destination of digitalization. So companies really have to stay on board. Talk to me a little bit about, you know, the conversations that you're having with clients around this area.
Yeah. So I, of course, as you have guessed, Edna, I believe that it's worthwhile that companies persevere, and first and foremost because there is huge potential in the business. So I think that's the starting, you know, belief. I think what is absolutely critical is you need to be able to show value very quickly. So, what I would, strongly advise, and that's what we actually do with our clients, right, is to basically kick off some use case that are of critical importance to them, and demonstrate very quickly that you can unlock value and a significant change in the way they work. I think what is very important when you assess the potential of digital, you need to be able to draw a vision, and this vision needs to be disruptive, needs to be bold, but you need to be able to, that you can start, right? You need to be very clear on where you will start. And I think that would be the advice that I would give. Build a vision, don't spend a huge amount of time on it, rather get going and demonstrate that you can drastically unlock value. But then what is important, don't stop there, right? Walk that journey between where you are today and that vision.
I think we see many companies too putting in place some smaller startups, backing them really, almost in parallel, getting some initiatives going, and they're actually working really well and having some great results. But let's have a look and see what everybody at home, what our viewers are looking at here and where they think there are the big gaps here. Leadership 13.9, capability gaps in the organization. The change management. So in a way, the three top things there, as you had said, the change management. In fact, I'll let you just qualify and quantify that. If you go back to that, Sylvain, looking at it, change management seemingly on top of everybody's mind, then followed by the capability gaps in the organization and leadership. The rest of it seems to take care of itself. Give us your few words on that one, Sylvain.
No, what I think is very interesting is that I actually think to a large extent, the role of leadership, the ability to build the appropriate capability are actually absolutely essential to drive change, right? So, to some extent, when we talk about change management, what is change management? Change management is about changing the context of the organization so that the organization naturally embrace the change, right? And so I would argue that for change to work, you need a present leadership that will push the boundaries of the possible, allow the organization to embrace new ways of working. You will need new technology. You will need new capabilities in your own organization. So I would say that leadership capabilities are probably the critical element that would make change possible.
And a few questions coming in here. Stay with us for one more question before I let you go, Sylvain. But a question coming in from Schneider, Mohammed Moez. How can new technologies like AI and robotics actually help to, particularly at this time during COVID-19? The short-term and the longer-term view, Sylvain.
And we got cut off. I got cut off for 5 seconds. Would you mind repeating the question, please?
Okay, indeed. Looking at a question coming in from Schneider Electric, from Mohammed Moez here, talking about AI and robotics, and how can this actually help to modernize the oil and gas industry, and at a time particularly during COVID-19. And so in the short term and indeed for the medium longer term.
I think, when you think about AI, the idea really is to support, improve the quality of our decision. So, I mean, in the very short term, you can think about, reducing the number of staff in the front line, and that is true in oil and gas, and that is true in very, in very different industries. So, removing, frontline exposed to actual operation, and more generally in oil and gas, I think the real benefit of AI is decision support, really improving the quality of our decision. I mean, in BCG, we do work in production optimization, we do work in drilling operation, where you basically predict, main operational issue or non-productive event in drilling operation. You basically predict those events before they actually occur. And you can imagine that in drilling operation, being able to do that, you can drastically reduce the cost of your drilling operation. In the context of a COVID crisis, where the price of oil is very low, any dollar that you can save is critical. So I would say the two main things, right? Removing staff from the front line, reducing the number of staff exposed to the front line, and in general, improving the quality of your decision with a cost logic.
And indeed it is. It's a time of tremendous dynamic change in the industry too, and people really have to keep up with it. Sylvain, thank you so much. Do stay with us because we'll have plenty of questions for you afterwards. But now I'm actually delighted to introduce Christophe Sassoulis. And Christophe, I'm very eager to hear from you. You're here with Total, you know, looking at this region, and indeed you've worked with Total all your life. So you've seen what has gone on, you know, in other scenarios, in other situations, in other countries, when things have been good, when things have been bad, when the price has been high, when the price has been low here. But now let's have a look in terms of, you know, technology, innovation, and partnerships particularly, and how they can support these in the future. And, you know, of course, all eyes on you. We're talking about leadership, and I think everybody really looking forward to hearing what you have to say. Christophe, thank you.
Well, thank you, Edna, for this introduction. And maybe before starting, since we're talking about resilience, let me first thank all the operators in this industry, and especially in Total, because over the last 3-4 months, the industry has been able to deliver energy to the world and the people who need it. And that's a big demonstration of resilience. But if I look at now at the future, there's really, for me, 4 challenges to be resilient as a company. One is on, of course, on cost and efficiency. Was on supplier ecosystem. The third one is around climate and really associated with the behavior of our consumers. And there's also a fourth one on leadership and a way of working, which I think is changing. The first one really is on cost and efficiency. To be resilient, you need to be on the low on the cost curve, and we can't predict the oil price, so it's really being the cheapest you can. And that's where technology can really help. And maybe to I will give you a very simple example. And when you take a pump, for example, to export the oil, when you don't know when the pump will fail, what do? You design it with 2 or 3 pumps with redundancies. And that's what basically the industry has been doing for a long time. Now with captors, Internet of Things, AI, we are now able to anticipate when the pump will fail. Many people will tell you, we got the solution, UP. In reality, you don't. You have the solutions once you have your organization and your suppliers adapting to that new reality, which is starting to design with only 1 pump, which is not buying the spare parts that you used to buy, and actually repairing the pump just before it fails. And it's something we've done in Total, but as a company and as an industry, it's still something that is far from being really widespread. So that's really, for me, that's really the first challenge. Technology as an enabler, but we need much more to make it a solution as technology. The second challenge for me, it's really on the supplier ecosystem. And I think I will echo some of what Dolia said earlier on. We've built this industry by moving things and people around the globe. And if you look at what's happening over the last 2-3 weeks, you're seeing that one of the most difficult hindrance to that COVID has given to the industry is actually the difficulty to move people. Don't forget that 60 to 70% of what the oil industry is buying is actually services, maintenance, inspection. And so if you can't move people around, and actually we spend a lot of money, it's going to be hard. So we need to adapt to that. And if my pump example, for example, it's if you start sharing data with your supplier, with the manufacturer of that pump, with the subcontractor, then you start having a different kind of partnership. And that's where technology can help you repairing that pump earlier. You can also put forward the example of 3D printing. We've been able to print subsea equipment in shape. I think you got some picture on the screen to put subsea. And so you avoid doing that. And I do concur with Dolia that it's probably one industry we should look at is the aerospace industry because they have historically developed this ecosystem of suppliers. Of course, it's maybe a bit easier for them because there's 2 big operators, if you want, in the world. And so they have a more stable ecosystem of suppliers, which we need to build. The third challenge for me, it's really on consumer behavior and climate change. I will give you something that I found very interesting. In April, in the midst of the COVID crisis, one of the biggest LNG buyer for Singapore issued a tender. So they went to the market to buy LNG for 5 years. And they openly say that the first criteria will not be necessarily the price, it will be the CO2 intensity of the LNG delivered. So what our consumers want today is the less CO2 intensive barrels, gas or electron that you can provide. And that's really the responsibility of the industry to meet that supplier demand, and it's rapidly evolving. And we can do that through various things, through a combination, of course, of, as an operator, diversifying our energy offer, offering low carbon power, renewables, photovoltaic, where technology also will help, especially through storage and hydrogen, battery and hydrogen. But it's also being, and we sometimes forget it, being very efficient and very, in our own operation. We still do emit a bit of CO2 in our operation, including in the Middle East, where we got probably the lowest CO2 intensive barrels, but we still emit CO2. And so we have to work to reduce our emission, especially on a rotating machine. Of course, we can also help our customers because the energy mix of the customer can be adapted to lower their own emission. And finally, developing a business of carbon sequestration is probably a key. I will stop here. For me, that's the three main challenges. I will just tease you on the first one, because I do believe that this crisis has accelerated the need for a different kind of leadership and way of working. And the talents at the end is also a key for the resilience of the industry. But I will not comment on that. Back to you, Edna.
Thank you so much. And we'll have an opportunity, hopefully, to talk a little bit more about that. But again, I love your example, too, of the pump, because basically it really is, it's the simple things you have to look at to see the clarity in how you can build resilience in, and not just resilience for what's going on at the moment. Really, resilience is something I think that's part and parcel of this industry. You've got to have it in place and you've got to sustain it. Let's again go out to the audience to have another quick poll question here. And again, we're making you think a little bit in our poll questions this time. What are the most important factors when creating a successful business resilience strategy? So here we are. You're looking at, the need to build resilience in there. And indeed, exactly as we've heard from our three speakers too, it has to be a strategy. It can't be just an idea that sort of suits at the moment if the price is low, if the price moves. It really has to be a business strategy. So what are you doing? Are you looking at redefining strategy, partnerships with partners and suppliers, new technology, digital tools? Is that where your investment is going at the moment? Redesigning business continuity plans, looking at those long-term challenges that are absolutely essential, focusing on security of supply. All of these, ideas that you really need to be looking at, but what would you say is the most important? And rebalancing capital spend in 20 and 21. So have a look at that there. And while our dear audience is looking at that at home too, and keep those questions coming in. If I might, Chris, I'll just come back to you and pick up on something that you also said. You look at technology as an enabler, as you said, not as the solution. And when you look, I think, at that great dynamic change that's been happening in the industry, and you look at, I think, the last few months particularly, is it really about making sure, and we've seen it from what Sylvain even said there, it's about getting the bigger picture right, the holistic combination, making sure that everything is managed, I think, in maybe not in equal doses, but is managed together. There's no point looking at any of these areas in a silo. Is that what needs to happen, Christophe?
Well, yes, indeed. I think the digital is, we've got a very fragmented industry in terms of several layers of suppliers. We, as an operator, you do contract quite a lot compared to other industries, and it created historically some rigidity in the system. Another example I have in mind, I worked 5 years ago with a small startup that is managing the data from the marine vessels, the vessels that go to the platform back and forth. And they had a great way to optimize and make sure that what's happening now, which is sometimes those boats go full speed and then they wait for hours at the docking space, which is an inefficiency that doesn't exist in other industry. But we started making a difference the day that we partner not only with that startup, but with one of the big marine operator and change the way we contract with them so that we're able to actually save 20-30% of both CO2 and cost. So it's really a combination of redefining the risk reward way to conduct operation in a fragmented supply chain. It's not an easy task. It's a strenuous one. We started years ago, but that's really, I think, for me, the key of that.
Indeed. Now we have a few questions coming in here, and one I want to, you mentioned on it, so we'll elaborate on this just a little bit here. I don't have, we don't know who this is coming in from, but please put your name if you want on it. We're always happy to find out who you are. But a question that's come in, Total wants to be net zero emission by 2050. is the supply chain equipped to actually support that? Christoph?
Well, it will have to. I think it's clear that we're here to serve our customers, and I've been clear in what I believe the customers want today. So I think some of the supply chain is equipped for that, and some of it will need to adapt. But every industry has to reinvent itself to meet the customer's expectations. So I don't think there's any way out of that.
Yes, indeed. I think it's, and there's time at the moment, and I think the encouraging thing is that everybody is looking at this and it's on everyone's agenda. Let's see what people at home have been thinking here, what's on their mind in terms of the most important factor in creating that business resilience there. 26% up there at redefining strategic partnerships with partners and suppliers. Then 51%, so check this out, redesigning business continuity plans that identify long-term challenges. So by every account there, that indeed is the absolute highest. I think it's a given, investing in new technology that's going to be important. People know that's in place, but really looking at the business continuity plans for the longer term. So Christoph, your comment on this before we move on to the full round of questioning, please, Christoph.
No, I think if you understand business continuity plans, I mean, very often it's used on a more short-term basis. So I think here people understood it as a long-term. Yes, we need I think everything we've said with Sylvain and Dolia is really about redefining what are the challenges and how you address it, both as an industry with the supplier ecosystem. So no, really concur. But I think the first one, I would have picked the first one myself.
Right. Okay, well, I'll come back to you on partnerships because I do want to talk about that. And I think a lot of people out there will want to hear what you have to say about it, because it's very, very vital for all the oil services company to all the suppliers, the construction, everybody you have out there, and the industry depends on partners. But really now I'll be so happy I want to thank the three of you for really delivering some very powerful presentations. They're really taking an in-depth look and just seeing what's been going on here. So if I could just quickly go back to Alex, and if I can throw a question to you, Alex. When we look at other industries for oil and gas, where can we learn from? And we've heard this from, in fact, all of you. Where do you think we can actually learn from industry that really have looked at cost competitiveness, right across the board? What do you think?
So actually, at BCG, we looked at a long list of industries, trying to understand, are there maybe a few gems which were able to create maybe cost improvements in collaborative ways years after years, and maybe for the last several decades, right? Three industries stood out as something oil and gas can learn from. It is definitely aerospace, something that we already discussed and Christoph mentioned. It is also automotive, and another one is defense. So in some sense, if you look at these three industries, they were able to build pretty deep and integrated supply chains, which allow them to not only to evolve and innovate, because in each of these industries, we see new models of the products coming up very, very regularly, but also to improve cost competitiveness year over year, as well as, starting from 1970s. It's actually quite a great progress on many of these industries.
And indeed, they're all industries too. I think you look at the high level of knowledge, of expertise, of engineering and scientific information. So a good industry whereby they can actually exchange best practices. And an industry, sometimes different industries where definitely there's crossover. So a lot to be learned from each. Sylvain, if I might ask you a question I have here. How willing is leadership taking on change in general and champion change until it's fully embedded in the organization? A question specifically pointed for you, Sylvain, and is it happening?
I don't think it's happening enough, right? Otherwise, I think some of the, you talked, Edna, earlier around the fact that, the industry has spent a lot of time and energy around digital and technology, not always with, the most exciting results, especially in the, changes that sustainably change the organization. So I would argue that maybe leadership has not been present enough. What I think is essential is, I think, and Christoph was talking about it, I think the industry is realizing that we are at a crossroad, right? And in fact, if you look at the leadership of all of the oil and gas majors, you clearly see a shift of tone, right? There is the articulation of a vision, which is, net carbon neutral, but also the criticality of building resilience in the business. So what you're starting to see leadership getting closer, increasingly closer to this reality. And in fact, in our the clients that we serve, that are driving sustainable and impactful change thanks to technology, leadership is extremely present. So I think they're moving, it's critical, they're moving, and there's starting to be a realization of the criticality of leadership to drive change.
And I think at any time when we are at that crossroads, it's difficult because people have to take a chance, they have to make a decision, and they have to take a risk. And indeed, a question I have in here, and Christophe, if you might take a check at this, and it's a question coming from Simon Esefifle. It's from the Ghana National Petroleum Company. So Simon, thanks for sending that in. And he particularly asked, is the industry ready for the quantum of risk that is associated with using some of the new technologies perhaps that are out there? And again, looking at AI and digitalization, is there still, Christophe, a little bit of fear perhaps in the industry? What do you think?
Well, maybe there's two aspects to that. You can't be as bold as you are in the IT industry. Why? Because we manipulate explosive material. We manipulate hydrocarbons. So you won't take the risk on a new technology if it's putting safety and the environment and the health of your people at risk. So that's one point. But another angle to it is in a world of lower oil price, you might take the risk of a lower reliability, of maybe saying I won't be able to produce 365 days of the year by just testing a technology that can, in the balance between risk and benefit, get you. And I think the industry is willing about that. The difficulty is that sometimes those two aspects are interlinked, and you want to make sure that you're not playing with safety. And so I think that's the two. I do believe the industry is looking into it. Building on that, the industry has made some, you have to define a vision on digital and data, but you also have to balance with the solution coming from the ground, because there's a lot of example in the past 10 years of industry who have poured a lot of money into digital without really getting an application. So that's where I think, and that's the thing we're doing in Total, is trying to build a digital factory that is only fed by the ground. And the subject will not give in by the top. The top organize, set up the mean, but it's really the people on the ground that create what we call the use case, or use cases. There's going to be many of them.
Now, Alex, if I can come back to you, and we just refer back to this weekend where we had what I think OPEC and friends would be considering a very successful meeting, whereby there seems to be a lot more harmony within the group and within producers. The oil price the market will decide where it will go and the strength that will be there. But you talked a bit there about the very fundamentals of oversupply, and it looks like we're going to have oversupply in this market for a while. So this will continue to put pressure on producers, on operators, on suppliers. Everybody really is squeezed here. So once again, that need, as you had said earlier too, for perhaps a little bit more understanding and harmony in terms of resilience. But the harsh reality is that this will probably be with us for a while to come. Why is there such a need, that we see? Probably, OPEC talks about a fair price, and the producers talk about a fair price, one that's good enough for investment for the producers, one that's, high enough for investment, low enough for consumers. So it's finding the level that is good for everybody there. Why do you think it's just so important that we get that right? Because is there a danger the investment will come off the market, particularly at a time like this?
So I think, and I think you are spot on. Actually, what happened since the beginning of the year, and especially after we entered this COVID and low oil prices double shock, many projects were either stopped or they slowed down. Many FIDs were delayed Actually, one of the biggest trends that we see right now is that some of the biggest FIDs, which in the past could have been maybe 10, 20, 30 billion US dollars, now are sliced into pieces, and some FIDs are made on the basis of maybe 1 billion or 2 billion, so that operators do not overcommit. So actually what is happening, because of the maybe low confidence and because of the low oil price, and all of this is amplified by COVID situation, actually lots of demand actually just disappeared from the market, right? This is about large capital projects. It's about even medium and small type of capital projects. Most of our clients with whom we're talking, they're trying to postpone all type of maybe turnarounds, overhauls, type of maintenance activities, try to push it over time, right? And actually this puts even amplified pressure on the supply chain, because supply chain need to adjust to new level of demand, new level of cost, and as well as Silvan and Christoph mentioned, also a new level of CO2 and climate change requirements, right?
Absolutely. I think there's so many dynamics at play at the minute that it's difficult to move forward, I think, and to move everything forward at the same pace. So a lot to look at, and probably a little bit of hesitancy. And it's not just in this market. We're seeing this right across the world in every sector. Silvan, if I can come to you when we're looking at, how do we prevent capability gaps in an organization? And a question in here in terms of what are the main factors that are, preventing capability gaps in the organization right now? What do you see?
I think if you look at the history of development of digital and new technology, right? I think what you've seen in oil and gas is very much the natural reflex of an oil and gas organization. Digital and technology has been driven by the technology organization, by the technical function, very centralized approach to technology development and technology deployment. Now, I'm totally where Christoph is. He talked about the digital factory and leveraging the front line to identify use cases that can make actually a difference to the business. I think more than ever before, what digital is showing to us is actually the criticality of getting closer to the reality of the asset to address operational issues. And I talked a little bit about that earlier. There are two main reasons for that. First of all, if you just look at the ability to deal with data, the way our systems are organized at asset level, there is actually no consistency. There's a huge degree of customization that is actually needed to unlock the potential of digital. Second, you want solutions that are really embraced by the organization, because you will need to change the way you work. And identifying those use cases that address business issue, but also address friction in the way our staff work is essential. So let me then go back with this as a backdrop. Let me go back to your question. I think the typical reflex of organization has been to then beef up their capabilities in the center: data science, IT architect, data engineer. I see a business case for that. It makes a lot of sense. But if you accept that necessary degree of customization, then what actually is essential is you need to upskill your operation with new capabilities. So you need to address those capability gaps where the technology are going to deploy. You will need, central resource to make digital a reality, to train your staff in the front line. But there is a huge upskilling agenda in the operation. And when we face at BCG capability gaps at our clients, it's rarely in the center. They have a lot of fancy capabilities in the center. The gaps is really on the IT architecture, on the data engineering, on the data science side in the operation. That's where the gaps are. And there is a logic behind where we are today. And this logic is the history and our DNA as an industry.
So indeed, and all of that really has to be part and parcel of the collaborative strategy that's in place. So companies need to make sure they fill these gaps. Alex, I have a question for you here. What are your suggestions to balance the years of trustful relationships with the suppliers in particularly this turbulent time? And this comes from Kashif Saeed from Neptune Energy, particularly for you, Alex. But I'm going to come to Christoph, I think, after this, talking about partnership. So suggestions to balance the years of trustful relationships that have been in place. What can we do right now?
So I think that indeed there are pockets of very good relationships between operators and suppliers, and to be honest, not all suppliers, right? This actually is a bright spot. The main suggestion is use this relationship, and this may be cultural chemistry between operator and supplier to try to explore a deeper collaboration. So we see that, maybe performance-based contracts is the minimum level of collaboration which you can try to use to align interests between suppliers and operators. But going deeper than that, having joint planning teams, joined maybe teams which are looking at some of the operational aspects, joint teams that looking at innovation and specs of the next products and services. This is actually the way to go. Unfortunately, not all operators and vendors actually have years and years of good and trusted relationships. Unfortunately, what is happening, the industry is using 3 bids plus buy as the main method of procuring goods and services everywhere in the world. And it's very difficult to build trusted and long-term relationships without any visibility or any level of guarantee of future supply. So this is actually the area where we will need to strike a balance, because 3 bids plus buy is good for cost competitiveness, but can be destructive for longer-term relationship.
Yeah, a lot that has to be done there. Christoph, I have a particular question for you, so you can maybe pull the leadership one in this, and I am conscious we've only got a few minutes left in our entire broadcast here. So Christoph, a question coming in from Mauro Castillos. The oil and gas industry is generally risk adverse, particularly for security reasons, but how does Total support innovation in all levels of their employees and not just in the leadership levels? So you've got the overall question there, leadership and employees in terms of innovation.
Well, I would maybe dare saying that innovation should not come from the leadership. The leadership should set the direction, but the true innovation comes from the front line. That's really what it's all about. And yeah, it's a very good question, because we from very top-down organization in oil and gas for historical reason, for safety reasons sometimes, whether it's right or wrong. But I think I've seen over the last 4 or 5 years in many companies, and in particular in Total, a huge transformation. We mentioned the digital factory. Our digital factory is working on the basis that people, we had a case, for example, of technology, AI technology to enhance drillers. And it started working when we put 5 drillers with 1 data scientist, not 5 data scientists with 1 driller, i.e. people who were used to be on the floor and had the right question. And that's where the innovation is really going forward. So there's a small balance to be found, of course, with safety, but I've seen a lot of innovation lately on many aspects. We're designing unmanned operation with robotic. Here in Abu Dhabi, we are partnering with ADNOC on a drone-based seismic acquisition. Believe it, I mean, that's true innovation. Huh? You remove people, you just send drones. So no, I see, and it's about time, I would say. It's about time that this industry is accelerating its pace. We've always been highly innovative, but it's now the innovation is going down in the organization to the front row, and that's really good. And actually, that feels good.
It does, and long may it continue. I think it is. There's a sense of urgency in the industry at the moment, but also, I think a sense of commitment too. So I'm in that time when we've just got about 30 seconds for each one of you to send perhaps a few words of inspiration out there, because everybody is nervous. These are uncertain times. Resilience, obviously, at the top of everybody's agenda here. Alex, just a few words just to quickly wrap it up here in terms of what can people do in the short term, because people are worried right now.
So I'm actually very optimistic on the future of the industry, because oil and gas knows how to deal with risk. And for the last 150 years, actually, oil and gas industry was able to identify new risks, take them under control measure, and find proper mitigants. So in the short term, of course, we need to look at resilience and financial health of our supply chain, at least in supply chain angle. And actually, I'm sure that with some level of commitment from the industry, this is a solvable problem, and we can solve it very well.
We have to. Quick word, Sylvain, we're wrapping it up as we go.
I think the word I would like to the audience to keep is belief, right? Belief in the potential and belief in the own capabilities of the industry to adapt.
And I'm leaving you the last word, Christoph. Another just word from you and we're good.
Yeah, well, providing energy to the world is one of the most fascinating endeavors that one can dedicate its life to. And so the challenge of providing cheaper and cleaner net zero energy, it's up to our generation to do it, and we have the resources to do it.
And indeed, I think we must never, ever lose track of that. That is ultimately what we have to do. That's it, gentlemen. I do have to wrap it up. Resilience obviously is something we need today. We needed it yesterday. We're definitely going to need it tomorrow, but it's about building that in now for the long term. And I want to thank all of our audience at home, but more importantly, I really want to thank our dear guests, Alex, Sylvain, and Christoph. Thank you so much for taking the time. Thank you for being with us. And once again, to remind you, this is all in the run-up to ADIPEC 2020 in November. Do have a look there. We have plenty of resources to share with you. Make sure you share this with your colleagues and friends in the office. You'll have the download of this very, very soon. We'll have it back for you. So we'll wrap it up there. And I think it's very much keep strong and look ahead. Resilience is where we have to be at this point in time, and it will hopefully get this industry through, because the terminology out there, the outlooks that are out there, things are looking good in the longer term. We just have to stay the pace right now. So that's it for me, Etna Trainer, indeed from all of the team here at ADIPEC and from the Boston Consulting Group. So we leave it there. Thank you all so much for being with us.
Thank you.
Thank you.
Thank you.